Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. It's of course the first Tesla weekly video that we are above 50,000 subscribers. So thank you very much for all the support. Thank you all for all the Tesla fans, Tesla interested investors. I hope you really enjoy this series. And of course, thank you very much for the 50,000 subscribers. The next goal is of course 100,000. So if you're new here, hit all the buttons, like, subscribe, do all of that. You can always unsubscribe later. It's free. I won't sell you anything. But if you want to support me further, do check all the links down in the description below or in the pinned comment, or go to fool.com/couchinvestor. Would really appreciate that as well. So as always, we start the Tesla weekly video with the numbers out of China. And towards the end, I would like to have a small discussion on the Tesla, the state of Tesla, the state of EVs, and then of course, some AI discussion as well. That Ashley Vance, you probably know, maybe you've read the Ashley Vance cover, or let's say biography on Elon Musk or on Peter Beck or on some others as well. He wrote a small thread on X with regards to Tesla's big advantage with AI. So more on that later in this video. So first up, we have the Tesla weekly insured number. Another record week here, 15,500. Quarter over quarter, we're doing quite well. I mean, even year over year, China is really doing quite well for Tesla right now. That said, overall, we are still down 1.3% year over year. Of course, if we continue like this, on this trajectory, we will be up year over year. Last year, towards the 39th, 40th week of the year, we did drop a little bit. Remains to be seen if we're going to see the same thing happen again. But right now, this current pace, this current trajectory, we are going to beat last year's record. Of course, we know that China has been doing well for Tesla all in all, because some major countries in Europe did not perform as well. Now, here we can see the same thing. China insurance data, Tesla versus the German luxury car companies such as Mercedes, BMW, and Audi. Tesla, again, outperforming all three for the week. But if we look at all the other markets here, of course, you've got China, the outlier. We're still down 1.3%, but it's really the market that pulls Tesla a little bit further, right? If we remove China, then of course, you're going to see the other markets a bit clearer. But as we've seen in the past, Germany is down 41% year over year, France down 28% year over year, Norway down 36%. So it's a market that is very, very much saturated with EVs. Small market overall, but the big hit is definitely coming from Germany, and then the other one is coming from France. It's not like the UK is up. No, UK is down 13%, but not as much as Germany and France. So all in all, Tesla would have a good-ish year. Now, I would say good, maybe okay-ish year if Germany was not an issue. Because we've got other countries, as we've seen before. The Netherlands is up 47% year over year, Belgium up 42%, South Korea up 421%. So they add a little bit, or they help the hit that was created by France and Germany. But I mean, it's pretty clear China, if we add the United States, it would be also very, very big, very, very big bars here. So they definitely keep helping out Tesla. If we move to BYD, we've got ICE vehicles, which of course they stopped selling back in 2022. Then we've got EVs and BEVs. So it's pretty clear that EVs are doing much, much better, right? BEVs a bit less. I mean, we're still far from the record, but EVs are doing better already. Now, of course, we know BYD has countless models, right? It feels like every single week they have a new model, or another Chinese competitor has a new model that has come out. Plus, they are very, very cheap. Not all of them are pure EVs. Some of them are plug-in hybrids as well. So when you see some comparison, always check if it's EV versus EV, or if it's EV versus plug-in hybrids, because that's not an apples to apples comparison. As you will see in just a second, that's something that an analyst, a pretty bearish one with a $120 price target, keeps on comparing. There's no comparison. So I don't know why they keep making it. Maybe just to prove their bearish point, but they're not proving anything. So there is that. On the bullish side of things, it's still coming from the Cybertruck. Cybertruck, yet again, in July, was the best-selling, I won't say vehicle, but the best-selling full-size truck with a price tag over $100,000. It beat the GMC Hummer EV pickup. It beat the Silverado, it beat the F-Series, so the Cybertruck still doing extremely well for Tesla, should reach profitability by the end of 2024. Plus, of course, you're still hearing quite a lot of negative headlines with regard to the Cybertruck, or they're not making this model anymore, this and that. People are still buying, still a long, long waiting list. They are pumping out more and more Cybertrucks each and every week, each and every month. I think it's still early days. Plus, they did a survey. How often do F-150 owners use their trucks for various tasks? I mean, it's pretty clear that the majority of people do not buy an F-150 or some other truck, pickup truck should I say, for towing. 7% said frequently, 29% said occasionally, shopping and errands, pleasure driving, 87%, 70%, and then you've got 52% said commuting. So to say that, oh, the only folks that will buy an F-150 or a Cybertruck or a Rivian are those that need it for towing and trucking and stuff like that. Clearly, the data suggests that that's not the case. Majority of people will buy it just because it's a car, it has 4 wheels, and yes, sometimes you can do some towing stuff, you can do some work stuff as well. But to say that it's a vehicle that has to be marketed for people that use it for work, no, it will also be marketed as that, but the data suggests that, and this is coming from an F-150s, right? The data suggests that the majority of people buy it just for fun, just to do day-to-day tasks, just like any other vehicle out there. In Europe, definitely not the case, right? In Europe, you rarely see pickup trucks as big as the United States. Europe, smaller cars. So yes, the Cybertruck is going to be very, very popular in the United States, not just for the Cybertruck trucking reason, but because it's a Cybertruck. It's cool, it's fun. I mean, it's amazing. If you've seen it in real life, it's amazing. I don't know if it will catch on in Europe. Maybe it's going to be a niche thing. Probably, let's face it, it's probably going to be a niche thing. But yeah, just to show you that when you sell a pickup truck, it's not just for folks that want to go to Home Depot, buy the whole store and put it on their car. No, the majority of people just want it just to drive, just to have a big presence on the road and feel safer. That's about it. Then moving on to the Model 3. So Tesla has introduced a brand new textile interior option exclusively for the Model 3 rear-wheel drive in Mexico. This includes gray textile seats and standard features. It is now the only interior option available on the Model 3 rear-wheel drive for the Mexico market. Some people have started to speculate, because this is not the only options that you can add there in Mexico. Some people are starting to speculate that this is just a little preview of what will happen with the next generation vehicle. To be honest, I don't see how they came to that conclusion. It's cool to have an extra option for textile. I think it's great, especially in warm weather areas. So yeah, share your thoughts down in the comment section below. And then we've got the analysts. So the analyst from Bernstein, always the same one. Tesla has lost share in all geographies. In both xEVs and EVs, share loss has been most acute in North America. We don't believe that Tesla will be able to regain share or grow materially until it launches all new lower priced offerings, likely only in 2026 and 2027. Company said first half of 2025, but okay. And believe the company's valuation is increasingly disconnected from prevailing fundamentals. Reiterate outperform with a $120 price target. Again, they're not really looking at the full vision, plus clearly they don't trust management. Management said first half of 2025, new models come out, and they say here nothing, right? They talk again about Tesla and market share in cars. But Tesla is already much more than that. But here, again, it makes no sense. They compare BEVs plus plug-in hybrids. Why? Just to make a point, it doesn't make sense. Plus, it's true that Tesla could not get 17.5% market share forever, right? Keep it forever. No, as more and more folks enter the market and start selling some cars, of course, eventually Tesla will lose market share. But here, again, we are comparing BEVs and plug-in hybrids. We're also comparing a company, Tesla, that sells four models, S, 3, X, Y. Two companies that sell countless models and probably don't really make a profit on any of those models. Maybe on the plug-in hybrids, but on pure EVs, probably not. So again, it's comparing apples to not even oranges, apples to, I don't know, peanuts or something like that. It makes 0 sense. Plus, let's face it, if you don't look at the energy side of things for Tesla, then you're missing already a big chunk of the overall picture. And then you have to think about the AI story. More on that in just a second. But first, I do want to touch on something about super investors. We did 2 videos about super investors. If you missed that, it's going to be in the top right corner. But one thing I've noticed is that nobody holds Tesla. No super investor holds Tesla. Actually, that's not true. Only one. Only one super investor holds Tesla. And it's not even a big position. Currently, it's Josh Tarasov from Greenlee Lane Capital, bought in Q2 116,600 shares. Other than that, nobody holds. Some folks did buy, then sold, buy and sold, bought and sold. David Tepper, for example, Appaloosa Management, bought and sold. But yeah, it's amazing to see that none of them want to take on the risk of buying and holding Tesla. They have no problem buying and holding some other companies, but Tesla apparently is not good enough. You might say, okay, it's risky, it's volatile right now, fine. But as you've seen, since 2020, right? Since 2020, the company has grown quite substantially. Nobody wanted Tesla? That's quite strange to me. But okay, means we might be early on. Maybe they're waiting for Tesla to be a bit more stable free cash flow wise. I don't know. Moving on to Ashley Vance and the AI stuff. So he posted on X, I'm not allowed to say who said this, but someone with a very deep knowledge of AI and modern factories says Tesla has a massive edge on bridge between AI and physical world. This person thinks the other building humanoid robots don't have a great first customer. Tesla can test on its own factories first before it sends the robots out to customers. The AI builders, meanwhile, don't have factories. He thinks people don't count Musk factories individually as among the big tech empire, but that collectively they have something the other big tech players can't match. I think, this is a quote, I think that will be extremely important when the physical part of AI starts to kick in. Being able to bridge the AI into the physical world will be extremely massive. I think none of the other companies will be able to follow. Says people have a tendency to wave away the complexity of how difficult it is to build the complex factories and warehouses Tesla already has in place. I'm fairly long Elon empire companies. I mean, to be honest, if you followed the Tesla story for quite a while, you are not surprised by this, right? Building the machines that build machines. Of course, Tesla with the Musk economy has a big advantage, has a huge advantage because they can take things that they've learned from SpaceX, things that they learned from Tesla, put it all together, right? AI engineers, the money, the capital, right? GPUs, building data centers, all of that. Can a small humanoid startup do all of this? No. Can they raise money? Of course. But Tesla doesn't need to raise money. Tesla doesn't need to wait for others. Yes, maybe for the chips, probably for the chips. But all the rest, no, they have the huge advantage. They're already building robots right now, right? They're building cars. They're building computer on wheels, humanoid robots, megapacks, all of that. They know how to build stuff. A small startup, with all due respect, no, they cannot. They will need huge amounts of capital to build factories, to build the robots. If they do not do that, then they're probably going to outsource it, right? Which means they don't own the supply chain. They'll have to wait for another company to do stuff for them. So yes, Tesla has a huge advantage. Now, of course, these things don't happen extremely quickly, but the advantage is that they can test it out in their own factories. They don't mind if the robot screws something over inside the factory. The moment it leaves the factory to customers, to people's houses, then it needs to be perfect. But up until then, they have the luxury of testing it out in their factories that is currently building more robots, more cars, and more whatever they want to make in the future. Huge advantage, massive advantage, in my opinion. Now, right now, as I will keep on repeating again and again, Tesla needs to sell more and more cars. The cars need to be more and more affordable. People need to know that buying an EV is not the end of the world. Buying an EV does mean that you can go on road trips. Buying an EV does mean that your car will not suddenly catch fire. They need to advertise. They need to educate the public, even if you think, oh, many people know about Tesla. Okay, fine. Many people know about Audi, BMW, and all of those cars as well, yet they do advertise, right? Because you want to educate the people. You want people to say, oh, this is the car for road trips, this is a car for work, this is a car that can do this car can do that. That's the magic. It's all part of convincing someone that you're selling them a good product. And Tesla does sell one of the best products, if not the best product on the road. So why not tell it to more people? On X, forget it. Put it on TV, put it in sporting events, do something. Because yes, currently in the short run, which means 1, 2, 3 years, the big thing for Tesla is selling cars. I know many folks think, oh, but robotaxi. Okay, so what? Majority of people would still want to buy a car. Majority of people would still want to drive a car. Maybe in the future, maybe they would want robotaxis. Okay, maybe. But right now you're still in the business of selling cars. You're also in the business of the energy. You will be in the business of robots as well. AI, all of that, that's fine. But until we get there, until we get to the volume, we still have some time. So yeah, that's about it. That's just my opinion, of course. I still hold Tesla as my number one position, etc. Full disclosure. So share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.